Many companies make strategies. Very few measure whether their strategy is working or not. As a company owner, as a student, as a professional, in this lecture, you will understand how performance of the strategy is measured through the Balanced Scorecard framework. Thanks to Mr. Robert Kaplan and David Norton for making this framework that have helped many startups to be bigger companies. It is a basically strategic management performance tool. It helps in balancing financial and non-financial measures. Why it matters? Because before 90s, companies were focusing only on the finances. Now we understand that companies need to solve the problems, company need to provide a better customer experience, companies need to focus on branding, marketing. So the traditional systems were focusing on the financial results. Financial metrics show the past performance. The balance scorecard, which we will call BSC, links strategy with the performance indicators. Core idea of the balanced scorecard is that it translates the strategy into measurable objectives. For instance, your strategy can be earning 1 billion rupees, your strategy can be being a market leader, your strategy can be achieving 500 million customer. So how this idea of balanced scorecard converts it into smaller chunks, it makes that the bigger portion divided into different chiefs, then different functional managers, than the small level officers. I often say that the balanced scorecard does not simply measure the performance, it also engages the employees so that everybody is aware that where they stand and what is their contribution in the organizational success. So it also aligns organizational activities and vision, monitor performance across multiple dimensions. Four perspectives of the balanced scorecard are: number one, financial perspective. Obviously, companies are there for profit, so financial perspective matter a lot. Second is the customer expert perspective. Companies work for the customers, so their perspective matters a lot, and this is the reason balance scorecard is important. Thirdly, it focuses on internal business processes, perspectives, for example, core competencies, resource based value, VRIO framework that we explained in our earlier lectures. And fourthly, it is about learning and growth perspective. So we can see the balance scorecard is a balanced perspective that sees a lot of perspectives of a company. Financial perspective means it focuses on the profitability and value creation. I often say that companies, when they're earning revenue, they forget how much value their current product is beginning. They do not invest in the R&D. This is the reason that billion-dollar telecom companies are eaten by one small app made by one person, that is called WhatsApp. So WhatsApp has damaged the call revenue, the SMS revenue of the telecom companies. So companies, what they forget while creating the profit, while creating the revenue, that maybe their product is getting outdated, maybe there is some new technology coming, maybe the customer behavior is changing. So in terms of the financial perspective, the balance scorecard also focuses on the value creation. It helps in the revenue growth, it helps in the cost reduction, it helps in the return on investment. When you are measuring every aspect, then definitely when you are analyzing, when you know where you stand, then your second step is improving those numbers when it comes to revenue growth, cost reduction, and the return on investment. Customer perspective, the balance scorecard talks about the customer satisfaction. What is customer satisfaction? In simple word, customer satisfaction is not meeting customer needs. It is exceeding customer needs. When you exceed customer needs, then we go to the customer perspective number two, that is retention. When you meet, not only meet but exceed their needs, they stay with you. They do not go to the competitors, even though we know that in these days switching cost is extremely low. With the subscription business, customers just need to end your service and they can subscribe some other company. So this is the thing that helps the companies, the BSC. And balance scorecard also help in market share and in the brand perception. So four core aspects of the customer are also taken care in the balance scorecard. Internal business process perspectives are so important that if you are producing something on higher cost compared to the competitors, you are already losing. So the balance scorecard helps you in the operational efficiency. It means you give minimum input and get maximum output. It also helps you in the quality management, reducing the errors, producing greater goods. And then innovation process is so important that I often say that companies need to balance the exploitation and the exploration. This has been explained in the book Creativity Inc. I will sometime explain it on my YouTube channel. It says that the companies need to exploit what is giving them revenue. It means they have to keep on selling products. On other hand, they must focus on the research so that they explore the thing. So innovation process matters a lot, and Balanced Scorecard focuses on it. And then the fourth thing is the cycle time reduction. So this is extremely important for the companies to make the turnaround time as less as possible to serve their customer. Turnaround time must also be reduced in the manufacturing process so that more production can be done with the lesser resources. So the balanced scorecard also helps in learning and growth perspective, employee skill development, organizational culture, technological capability, and knowledge management. Technological capability is so important that often I rank it as some asset that is difficult to copy. There is no substitute of it. If you have trained employees that have been working on something for years, how come a newcomer can compete with them? Definitely, they will try to hire your employees, but we already covered it in the domain of retention, in the domain of training and development, in the domain of job enrichment, when we talk about learning and growth perspective in the balanced scorecard. So they will stay with you if you are applying the balanced scorecard properly. Strategy map concept. This is balanced scorecard, something that gives you holistic perspective. You make the visual representations of the causal effects relationship. You make learning drive process drive customers value, and customer value drives financial success. So this is the core concept that balanced scorecard introduced in after 1990s. That earlier companies were only measuring the profit. The smaller businesses which do not grow, these small medium enterprises which do not grow, they still focus on the profit, nothing else. They do not understand what is the bottom reason why their company is growing, why they are earning the revenue. So this helps you that how much customers are important. Their satisfaction is bringing you more customers, and satisfied customers are bringing you more customers. This is age of AI, this is age of the data. I remember working in telecom sector back in 2010-11. In those days it was so difficult to get the databases. The space was so expensive, but now thanks to cloud computing you can simply buy the space, and then you can analyze different aspects of any data. So you just need to have the simple SQL access. Even if smaller companies can use Microsoft Access, but you need the right mindset, that who is the real customer. So there is one book, I'm remembering the great books I read in my life. I wish I could sometime I will complete this series of 100 top business concepts. Then I will go for the books that I read in my life. There's 1,000 customers. All you need is 1,000 customers. Those who buy again and again, and eventually your company is successful. Cause and effect logic is that training employees improves the performance, better process increase the customer satisfaction, and satisfied customers improve the financial result. So we can see how in the balanced scorecard the logic exists. This is what the companies need to work on, because customer companies are not individuals. Startup founders are not individuals. They must be rational. They must focus on the process. They must not get emotional. So the logic must always be around in the business, so that you not only convince yourself but also your team, but also your vendors, but also your customers. Key performance indicators. This is a wonderful thing that the as you grow you need to kind of track every KPI. So it includes, each perspective include measurable KPIs. KPIs must be specific and quantifiable, and KPIs align with the strategic objectives. So you can select your top goals, then you can divide the top goals into different chiefs, and then you can divide every chief goal into different directors, and every director work is divided into different managers, and different managers have different officers, and different officers have maybe different interns. So you know that if 5 billion was revenue target, if customer satisfaction was revenue target 100%, then this guy was given this much percent, this guy was given this much percent, this guy was given this much percent. So the KPIs of the team officers make the KPIs of the manager, the KPI of the different managers make the KPI of the director, the KPI of the different directors make the KPI of the chief in certain domain, for example chief commercial, chief technical, and the KPI of all the chief of the domain make the KPI of the of the chief executive officer. And obviously chief executive officer KPI, chief executive officer is there to protect the interest of the shareholders and other stakeholders as well. So this is how you measure the key performance indicators. They must be aligned with the strategic objectives of the organization. So BSC implemented stepwise. So what how you can implement it? If you are a startup today, what you can do, you can define vision and strategy, you can develop strategic objectives. Third, you select key performance indicators. Then you set targets, because you need to set the standards for each KPI. And for that, best is industry standards. Do not go for individual standards, because when I was working in some telecom company, I won't name it, they made the balanced scorecard and they made it in such a wrong way that when I joined them, I told them that you have set the target to gain 5% increase in the market share, and you are rewarding your employees with the bonuses after getting the 5%. Do you know the actual growth of that market? So once I told them that I came from this company, and over there we grew in this market 15%, while your target is only 5%. So whenever you set the target, you must see the industry benchmarks and you must see the overall market share rather than keeping your own internal things like increasing this thing 5% every year. So this is not work. So you have to work on your targets very well, and then you have to monitor them and review the performance. While monitoring the performance parameters, the businesses and companies make so much mistakes. They often, what they do, they give the measurement task to own people. For example, a person in the commercial department measuring the performance of the commercial department, person in the sale measuring the performance of the sales department. So I remember working with the Lee Yong Fang, who is a chief of officer. He was CEO in the of China Mobile in Pakistan. So he was like, okay, we need to make a different strategy team, and I was luckily part of that strategy team who worked in years on performance measurement of different companies. So that is something that for the monitor and review, you must set up a team. Their core job is monitoring rather than teams reporting their numbers themselves. So definitely the person in the strategy department will get numbers from the commercial team, but they have the ability to analyze them. They have the ability to see the third perspective. And then we used to have a war room, and that is common in all multinationals and all the bigger companies, that all the chiefs sit together, the CEO is there, then they discuss problems and then they solve them immediately. So there is no point of sending emails and talking to each other. We are operating in an era where it is extremely easy to have virtual meetings. So the BSc implementation step by step, I hope you got it. If you have any confusions in it, you can avail my services. If you are a company, anytime, my link is given in the description. So when we see the balanced scorecard versus the traditional performance measurement, we see the traditional performance measurement were only focusing on the finances, though the BSc multiple dimensional approach, it focuses on customers, it focuses on employees, it focuses on the finances, it focuses on the training and development. So it has multiple perspective. Traditionally, things were on the short-term orientation, while the balanced scorecard is the long-term alignment of the strategic goals. Balanced scorecard in public sector can also be used for government performance and measurement. It can focus on quality and accountability. It aligns the public strategy with citizens' outcomes. So I want to give my services for the countries. Definitely, if any country needs my help, I will be around. I have helped a lot of companies earlier. For example, I helped Sudan Telecom. I helped the MISC Foundation that works under Saudi Crown Prince. So I had the opportunity to guide more than 60 startups about their strategy and long-term growth. And I'm very happy to see so many companies I guided in earlier days as a researcher. They're doing really well. For example, I'm a big fan of Smart Ends Belgium. They have the product of Brighter Bin, and I was luckily one of the earlier people back in 2017 who did all the market research and proposed the funding ideas to them. So I've seen that the startups, they sometimes, if they become successful, they help the country in a much better way. So Brighter Bin is helping the Belgium to become a better country in terms of the cloud